Wall Street is now available to Main Street. Some of the hedge fund world's most sophisticated strategies are now available to retail investors via mutual funds. But big question, should you buy? Brennan Lothery looks at that in this Funfair story.
The street has some new funds. The names are sexy and their complex strategies are being executed by the white collars of the finance world, the hedge funds. But they're being marketed to you on Main Street.
I'd say that for the more sophisticated individual investors or somebody working with an advisor. But I think there are a lot of places for these funds and portfolios.
According to Bloomberg data, of the 6 mutual funds being managed by hedge fund firms that have a track record longer than a month, the returns are, well, far from what you'd earn by investing with hedge fund heavyweights like Jim Simons or John Paulson. 5 of them have produced annualized returns shy of 5%. But AQR Diversified Arbitrage, the one fund showing decent annualized returns, has only been around 6 months, so it's too soon to tell.
Most of the mutual funds that have come out that are based on hedge fund strategies are fairly conservative, even by hedge fund standards. They're not leveraged. They tend to have relatively low market exposure.
The lack of leverage and market exposure has also made the returns appear weak relative to the average hedge fund running a similar strategy. According to data provided by Hedge Fund Research, only 1/3 of these mutual funds has beaten the returns of the run-of-the-mill hedge fund. So why buy these funds at all? Why even put them into your portfolio? Well, think about them as how some investors think about bonds. They're not there to make you rich. They're there to keep you rich. They're there for diversification. Of the 4 funds that were around at the start of 2008, all of them handily beat the S&P 500, which was off 37% last year.
By and large, the mutual fund version of hedge funds are the diversifiers. They're not the return enhancers. They're low-risk investments with potentially lower returns, but they're meant to diversify a portfolio.
Very unsexy for a supposedly sexy investment strategy. Brennan Lothery, Bloomberg News.